If you lost your job tomorrow and all you had was $1,000 in the bank, what would you do? Most people would panic. But today, I'll show you exactly how I turn that $1,000 into the first step toward financial freedom in Canada, using a plan built for beginners, backed by data, and designed to grow with you. Stick around, because at the end, I'll show you a move that most Canadians never even consider, and it could change your life completely. Today, I'll break down exactly how I'd invest $1,000 in Canada, even if you've never bought a stock in your life. No fluff, no nonsense. Just a real plan you can follow right now. And if you stick around till the end, I'll reveal a simple move most beginners skip that could easily 10x your results over the next few years. 1. Set the foundation. Before you invest a single dollar, you need to build your financial foundation. Otherwise, you're planting seeds on a rocky road. Here's your pre-investment checklist. Kill high-interest debt. If you're paying 20% on a credit card, that's a guaranteed negative return. Investing before clearing that, it's like bailing water on a sinking ship. Stack your emergency fund. Even $500, $1,000 in a high-interest savings account can save you from panic selling your investments during an emergency. Open a TFSA. The tax-free savings account is the ultimate weapon. You don't pay tax on capital gains, dividends, or interest. It's free compound growth. If you're in Canada and not using your TFSA, you're leaving thousands on the table. Now that the foundation is set, let's get to the $1,000 plan. Tasha 2, the $1,000 investment blueprint. Here's how I'd split $1,000 right now, not to get rich quick, but to build a scalable, stable, and smart step. 1. $600 in a diversified ETF. This is the core of your strategy, and think of it as the engine. I'd put $600 into a single-ticket ETF like XEQT or VGRO. These hold hundreds of global stocks in one place. US tech, Canadian banks, European infrastructure, all in one purchase. They're low cost, low maintenance, and ideal for beginners. Why this works? You get instant diversification and can ride the overall market long term. No stress, no micromanaging. Step 2, $250 in Canadian dividend stocks. Now you add a bit of cash flow and Canadian exposure. I'd invest in 1 or 2 blue-chip dividend stocks, like TD Bank, a steady growth plus consistent payouts, Fortis, recession-resistant utilities, TELUS, telecom, solid dividend. These companies have been paying dividends for decades, and they're not going anywhere. It gives you a mix of capital growth and passive income. Step 3, $100 in emerging tech or Bitcoin ETF. This is your growth tilt. Here's where you take a calculated risk. Bitcoin through purpose, Bitcoin ETF or ETH ETF are tech ETFs like IRKQ or Canadian growth stocks like Shopify important. This is not your main investment. It's your learning allocation. It helps you stay curious, watch markets, and build confidence. Step 4, keep 50 liquid. Always keep a buffer. Why? Because if you get hit with an unexpected bill, you won't have to sell your assets at a loss. Use a high-interest savings account like EQ Bank or Tangerine for this. Factor 3, where to invest. Okay, where do you actually invest this $1,000? Use an app like Wealthsimple Trade. It's free to use, designed for beginners, lets you trade ETFs and stocks without commission fees, has instant TFSA and RRSP options. Plus, they often have sign-up bonuses, like $25 for your first $150 deposit. Link in description. You can literally go from zero to investing in 15 minutes. Bank appointments, no paperwork. Just tap, tap, invest for. Most beginners get this wrong. Here's where most beginners mess up. They overthink and never start. They spend weeks watching videos, reading Reddit, waiting for the right time. Meanwhile, their money is losing value to inflation. The truth? Time in the market beats timing the market. If you'd started investing hundreds a month 5 years ago, you'd already be ahead of 90% of people. The power isn't in when you start, it's in how long you stay in. The temptation move. Most beginners miss. Here's the one thing almost no beginner does, but the smart ones do. Invest in income-generating assets you control. Yes, stocks are great, but if you want to build real freedom, consider creating a digital product, a budgeting toolkit, an investing guide, or even a one-page TFSA calculator. You can sell it on Gumroad for $9.99 and make money in your sleep. The best part? You already have the knowledge. Package it, sell it, stack the income. This is how you turn your $1,000 mindset into a $100,000 outcome. So if I had just $1,000 in 2025, I'd build a solid foundation, diversify through ETFs, add dividend stocks, explore tech exposure, and maybe create something that pays me forever. Smash that like button if this helped you. Subscribe for weekly content on investing, passive income, and escaping the 9-to-5 Canadian style. And don't forget to grab your free investing toolkit down below. This is Financial Mo, and your first 1,000 is just the beginning.